We begin this series with a special guest from Motilal Oswal Financial Services, Ramdev Agrawal, who co-founded Motilal Oswal Financial Services in 1987, and since then he has been, it's been no looking back for him. Ramdev is a renowned stock picker, and some of his top ideas in the past include names like Hero, Motocorp, Bharti, Grav Finance, where he clearly has managed to stay ahead of the curve. Ramdev, good morning. I'm so glad we could start a new series with you and with your firm.
Yeah, very good morning. And all the best to the show.
What's happening to the markets, Ramdev? I'm sure you can't speak about markets with the same zing. September has been an extraordinary month of volatility. Market volatility has reached to new heights now.
Yeah, that's the worrying part, in the sense that in any case returns are not there, and on top of it now you have volatility also. So it gives a kind of unease in terms of. The feel is not good in terms of your portfolio. Some days it is up 5%, some days it is down by 3%. So I think volatility with no return is an even bigger disaster than just the no return kind of situation. So it's been a difficult period in last 1 or 2 months. You can't think very clearly in this kind of environment. But yeah, it's okay. You have to accept what is. My sense is that volatility will further increase and it will become far more frequent than what we have seen in recent past.
Ramdev, hi, morning. Is there big disappointment amongst the market players after what the central banker, that's Raghuram Rajan, chose to do this policy in terms of hiking a few rates?
No, I don't think there is any disappointment, because in any case it was supposed to be a small affair, and because it was the first, it coincided with his appointment. I think the expectation was a lot, but I think as we hear him more, and I think he'll be able to take a lot more action as the situation demands. One will understand his mind much more. But right now, clearly, what people were expecting that day probably has not come up to the expectation. So there was a bit of letdown, and there was too much of buying ahead of the event. Maybe more because of Bernanke rather than him. So you can't fault him for markets move like that.
Ramdev, in the month of September, first we saw a print of 5200 on the Nifty. Then we saw a print of 6100 on the Nifty. So based on valuations or earning forecast for FY14, what to your mind is the deserving number or deserving range for Nifty?
Nikunj, it looks, we're still in the trend kind of thing. There's 5,000 to 6,000, or maybe 5,300 to 6,200, kind of this 1,000 point range. Sometimes it happens from 55 to 6,200, sometimes it goes to 5,200. So I don't see anything right now except for the political change in next 6 months, which can actually can have a huge impact in terms of expectations from the market, in terms of earnings growth or what policies can deliver. Or I really can't see anything big happening in very near term except for the politics.
Ramdev, what explains the kind of hammering the banking pack has taken? Sure enough, there have been asset quality concerns, but do you think this is more a technical play? We've seen the Bank Nifty collide almost 600 points on a daily basis.
But it rose also like that in the previous sessions. So, I don't follow this Bank Nifty as much as individual stocks, but if you look at SBI, it went to as low as 1,1500, went to 1,800, and in one day it came down to 1,700. So I think you are seeing that 100 rupees volatility very often now in SBI counter. So obviously it is also linking the same kind of volatility to the Bank Nifty. So clearly the concern on the asset quality, the policies about the growth, financial sector has become very important part of the index, and it's a very large part of the economy. So anything to do with the monetary policy, global or local, has a bearing on prospects for the banks, more probably in the near term. So I think the volatility in Nifty, Bank Nifty and banking stocks will be far more than the overall market. That's what we have been seeing, and that's what is likely to be the scenario going forward.
So is it, time to now start cherry picking within the banking space, the likes of an SBI or perhaps some of the key private banking names, or do you think the market will give us a better opportunity for an entry?
Yeah, so we clearly saw a very big opportunity when there was sell-off at 54, 5500. All the best names in private sector banks, they came down to very, very attractive levels, and that was an opportunity for a day or two. So, you might get the same kind of opportunities again, trying to time exactly the bottom and lowest price. Even now the prices are not that unattractive. If somebody has courage and one wants to buy into the stocks, clearly one should buy the best names even at current prices. So it's fine to buy at these prices and keep buying down all the way down if market corrects.
Would SBI be part of the best buy list?
See again, I have a lot of SBI in my portfolio. So, and I'm pretty comfortable having them right now because financials are cyclical. They take the maximum brunt of business cycles in the economy. So right now they are taking the brunt of the entire business cycle on their credit cost and the profitability, and more than the profitability, the opinion about the profitability, which is what is determining the stock price today. So I have seen these cycles 3 times in last 15 years, and there is no reason to believe that there is no story ahead going forward for Indian economy and financial sector and SBI. So, in the short term we learn a lot, but in long run it's back to same, sell low and buy high rather than buying low and selling high. So that's the story of most of the cyclicals, particularly high quality cyclicals like SBI. So I believe with the faith that India will have its own glorious times, maybe sooner than later, and we'll get our fair valuation of our stocks.
Are you broadly fully invested in the portfolios which you manage and the portfolios which you oversee?
Yeah, it is always fully invested.
So what is the objection, or what is the objective right now? Is the objective currently to preserve capital, or now it's time to it's time to revisit some beaten down sectors, beaten down stocks? Do you think it's now time to start, adding beta and growth back into portfolios?
See, the way we manage the portfolio is, we call it the QGL, quality, growth and longevity. So there we try to pick stocks which are very high quality in character and which has some amount of growth, and most importantly the franchise value is for long term. So we look at the last 10-15 years of the companies and we expect that next 10-15 years safe for the company. So that's the basic thought process. If we have 20 stocks or 18 stocks in the portfolio, we are open to churning them, in the sense that if a significantly better stock comes into the mind, we can definitely change that from the existing portfolio. That's how the churning happens, rather than changing a lot about taking a stand on the economic growth, and aligning the portfolio big time for that. Clearly, at times, say like this rupee depreciation, I could foresee 2 years back that we are going to have trouble in rupee. I didn't know it was going to be so bad, but general direction was very clear. So we tried to align the portfolio accordingly. It's different that the stock selection was probably could have been better, but we don't do a lot of timing in terms of what can happen to monetary policies or business cycles. So we try to buy stocks which are generally doing well and has some positive surprises in the future as per our calculation.
Ramdev, it's been a pretty split story when it comes to the auto pack. While Tata Motors, Hero MotoCorp have performed pretty well, there are other CV makers like an Ashok Leyland